Good noon, friends. In today's video, we will be discussing regarding the points that need to be taken care in March 25 from the GST perspective. First and foremost is that IST registrations. As you already know, IST registration is becoming mandatory from the 1st April 2025. What is an ISD registration? ISD registrations basically when we are engaged in the when we are procuring any kind of services on the head office and using for the multiple GST registration for the same entity. And we can distribute the input tax credit of these common services through an ISD registrations. We cannot distribute it to the post. We can distribute it through a post charge. ISD registration is becoming mandatory here, but if we are procuring any kinds of goods, then we still can do it through the cross charge because ISD registration is only and only for the services. Let us suppose if we are procuring any kind of specific services that are specific to any registrations, not for the multiple registration, then in such a scenario we can do the cross chart instead of the ISD registration. ISD is basically used when we are procuring the common services for the multiple GST registrations. These input tax credit we can pass on to the another GST of the same entity only and only through an ISD registrations, raising the invoice as an ISD dealers, not through the crochet. This is a very imperative and important that everybody has to initiate the ISD registrations as of now if it is applicable on them. This is the this is all about the ISD registration that is being implemented from 1st April 2025. Second one is the furnishing of LUT number for financial year 2025 and 26. LUT number is basically when we are doing any kind of export of goods or export of services and we are exporting it without payment of the IGST, then it is mandatory to furnish a LUT in RFT 11. LUT number we need to mention on all the invoices, debit note, credit note that need to be generated from 1st April 25 if we are filing an LUT for the financial year 25 and 26. This is also an important if we are doing any kind of export of goods or services without payment of IGST and we do not have furnished the LUT, officer has the right to levy the GST on the same and he may this qualify this item as an export and may levy the GST on the same and along with the interest. Hence, everybody has to be initiate furnishing of LUT for financial year 2025 and 26 because as of now the option is available. You can furnish today as well. Third one is an opt for the composition dealer. If you want to opt for the composition dealer, you should file the GST cap 02 by 31st March 25. It basically contains business detail, turnover detail, or how whether you are eligible for that scheme that's are required to be filed. Furnish. Next one is that opt for the quarterly monthly returns. If you want to opt for the quarterly return and monthly GST payment, you can opt it. If your turnover is not exceeding 5 CR in the previous financial year, this option should be exercised by the 31st of March to avoid any kind of ambiguity from 1st April 25. Hence, we should opt it by the 31st March. Next one is new invoice series. New invoice series, as you know, we have to maintain the new and the consecutive invoice series from for each that series should be unique for each financial years. Let us suppose if we are entering into the new financial year from 1st April 25, then we should maintain a new unique series invoice series from 1st April 25. Then we should get it implemented in our software so that we do not rush up on 1st April 25. And we should also check along with the invoice series. Should also focus on the components that are need to be mentioned on the invoice, like what is the GST on a supplier, recipient, HSN date, description of goods, services, quantity, taxable value, place of supply, IRN number. If turnover is exceeding in any financial year from 2017-18 5 crore, then it is mandatory to mention the IRN number on the invoices. In case of exports of goods and services, then it is imperative to mention that supply mean for export, supply mean to SEZ without payment of IGST or with payment of IGST that need to be furnished on the invoice header. This is also an important point that need to be kept in the mind. Next is the e-invoicing applicability. If your turnover is exceeding in any financial year from 2017 and 18 onward, then it is mandatory to generate the e-invoice IRN code from the government portals portal. Hence, we should initiate the e-invoicing registrations, and we should, if we want to configure our software, we should initiate that process so that we do not rush from 1st April 2025. And we should check our e-invoicing applicability, whether e-invoice is applicable on us or not applicable. We should analysis this with proper due diligence. Next one is the EV bill mandatory. EV bill is mandatory for transaction values exceeding 50,000 and there is a physical movement of the good, then it is mandatory to generate the EV bill. Even supply and recipient both are unregistered and still it is mandated to generate the e-way bill by obtaining the unique enrollment ID. Hence, we should also careful about that generation of e-way bill we are generating, because if we are our e-way bill is not proper, then officer can recover the GST amount whatever is appearing on the invoice and penalty amount as equivalent to the GST amount mentioned on the invoices. Hence, it is very important imperative in term of e-way bill as well. Next one is the GSTR 1 and GSTR 3B amendment and rectification. If we should review our all the GSTR 1 and GSTR 3B file till now. If there is any rectification or amendment is required in GSTR 1 and GSTR 3B, then we should initiate on the immediate basis. Although the time limit to correct the GSTR 1 and GSTR 3B is the 30th November or the due date of filing the annual return, whichever is earlier. But my suggestion is that we should do it in the current year only, because it will not impact our subsequent year. So that the reconciliation of this year will not go into the another year. That's why it is suggested that you should take the corrective action in the March 25 also. Next one is the ITC apportionment for the exempt supply. Let us suppose if we are engaged in the business of supplying the goods or services that are exempt as well as the both the taxable. Then at the end of the year, what we need to do, we have to segregate our input in the ratio of the exempt supply and the taxable supply. If we are supposed to reverse, we have to compute out the total exempt supply for the financial year, total taxable supply for the financial year, total input for the financial year, and we have to segregate this input proportional to the exempt supply. We have to reverse the input pertaining to the exempt supply in March itself. Reason being, if we compute out this ratio later on, then we may, if we are whatever we have reverse input, but we are supposed to reverse higher amount, then interest obligations may come on later point. Hence, it is suggested you do your calculation regarding your exempt supply, taxable supply, input pertaining to exempt supply in the March itself, so that you did not face any challenge in terms of interest implications later on. That we should do as of now, not later than. Next, most important, this is regarding the litigations. Government has, as you already know, government has introduced the MST scheme. In the MST schemes, if we have received any kind of 73, 74 section interest and penalty, then the government is ready to waive off subject to the payment of the taxes only. But last date to opt the benefit of this scheme is the 31st March. If you want to opt the benefit of the GST MST scheme, then you can opt by 31st March 2025. But let us understand something brief about an MST scheme. MST scheme is basically it cover all the litigations pertaining to July 2017 and March 2020. If we have received any kind of show cause notice but no order has been passed, if show cause notice has been issued but our appeal is pending but no order is passed by the appellate authority, then we are still eligible for the MST scheme. But conditions for obtaining the MST scheme is that you need to pay the 100% taxes, but no interest and penalty is required to be paid here. First of all, we will make the payment in the SPL 01 through the tax, along with we will SPL 01 and we will attach the DST 03 along with the tax payments. Right? If we SP, it should it should contain all the documentation, like we have withdrawal the appeal, we have payment the tax, we have make the payment of the taxes. Also, document should be accompanied by the SPL 01 and the SPL 02. Next one is that notice for rejections of applications. If the proper officer is review that you are not eligible for the waiver of the applications, then he can make the order in SPL 03 rejecting the applications within 3 months of filing the SPL 01 and SPL 02. Next, order for concluding the proceeding is filed by the officer in SPL 05. There is no requirement for DRC 07 in such a cases. But if officer has rejected our if we have filed the application in SPL 01 or SPL 02, but officer has rejected our application, then whether this order is appealable or not. Yes, this order is still appealable. If we are not satisfied with the order of the authority, they have rejected our application under the GST MST scheme, we can file, and we can file the order against the rejections application under section 128A. No appeal if the taxpayer has made any paid the tax, and the proceeding should be deemed to be concluding and no appeal can be proceed further. This is about the MST schemes. We everybody has to be, if you want to opt for the MST scheme, because it is very beneficial, it is very favorable. We are not supposed to pay any kind of interest and any kind of penalty. If you want to opt for the MST scheme, we should go for the MST scheme by the 31st March 2025, not later than this. And this is all about the points that we need, everybody has to be taken care in the March 25. If you have any query, you can come to us. Thank you. Have a nice day.